So next I want to introduce my good partner, Mike Becker. Mike and his team run the marketing, new business development, and really generating our proprietary deal flow that we consider a differentiator at Plexus. Mike?
Thanks, Brian.
Thank you.
Good morning. As I know most of you, but I'm Mike Becker, one of the co-founders and partners of Plexus. And it occurred to me this morning, I'm going to go a little off the rails here, Bob, off of my introduction, so don't panic. We're a teenager now, so we're 13. I was looking at the talent on the stage and just seeing how far we had come, and really was just proud. And I just wanted to give a shout out to all the young people on their job this morning in the deep dive, and it just made me really excited. So with that, I have the job of taking us through the year-end review. It's been a really exciting year, and before I jump into the slides that are more Plexus-oriented, a couple of highlights from the year. We added two children. We added Annie Coley and Trib Beeringer to our team, and one grandkid in Walter Tobias for Kel and Nina. So I think we now are supporting like 25 kids and 40 grandkids or something of that nature, or 42 altogether. But so that's really good. We started a podcast this year, and I know some of you this morning heard about it. It's the Plexus Podcast. You can find it on SoundCloud. We have 4 episodes. We're excited about it. We've gotten some good feedback on it, but we'd love any type of feedback, or if somebody wants to be on the podcast and has an angle, please contact me or Stotts Battle. We'd love to do that. And as you've heard this morning, VCM, Plexus VCM, Value Creation Method. We started our operating partner platform and really committed to it this year with Chris Antonello and his team, and getting ourselves better at operations and really adding value to businesses. So, everybody, I'm in the market a lot, as a lot of you know. I'm out there doing, and people say, well, Mike, what's the market like? And I was sitting with Katie, and we were trying to come up with our presentation, and I came up with this. Hot. The market is as hot as it can go, or I guess not, because it can get hotter, but it is really hot. It's been this for like the last year. So competition is increasing, valuations are high, interest rates are low, or our interest rates are compressing. How do we compete? So this year, we've really just boiled it down to focus, a constant business development in the market. Everybody on the team is focused on business development and their focused accounts. We are in markets every day trying to make a difference, trying to develop a relationship that can matter a year from now or 2 years from now or in 30 days from now. We're trying to develop great relationships and a great brand using things like the podcast, webinars, being apparent out there, working with sponsors, giving people examples of how we've done things in downside situations, how we've done things in upside situations. And lastly, really sticking to our focused market, which you'll see as I go through my presentation. But let's jump into the review. So our vision, invest for the future, stick to what we know, and deliver exceptional returns. Investing in the future. Rob Lovejoy. We added 3 new people this year. Rob Lovejoy came to us as a UNC grad, and he played for the Houston Dynamo, which is pretty cool. It's MLS soccer. I experienced his speed this morning at the 5:30 a.m. workout. So Rob joined us as an analyst with our team. Josh Snodgrass came to us as senior analyst, has an investment banking background, graduated from American University. And then Brian Murray is our newest addition. He has not joined us yet, but will join us in June. Just graduated from the University of Virginia. And we're real excited to have Brian join the team. So investing in the future with new hires. Also investing in the future, rewarding good work. We had 4 promotions this year. Cameron Coley was made a principal. Cameron works with me on business development, has done a really nice job. Brad Pence, who's been with us since he graduated from this fine institution here of UNC 7 years ago. And Brad was made a vice president. Brad focuses on execution and is taking on a little bit of a business development role as well. Barrett Beeringer, who's been with us for 3 years, came out of the MBA school here at Carolina, and he's made a vice president as well, works in execution and business development. And Katie Cohen, who came out of Georgetown. She's in non-Carolina, but she's a Carolina fan. And came to us from CSFB and private equity in New York. And you got to hear all of these individuals speak this morning if you're at the deep dive. I think they're impressive. They impress me. Great young talent that we've built around the team, and therefore they are deserving of these promotions. Continuing to invest for the future. I spoke a little bit about this already, but the operating partner model, value creation method. It really focuses on educating our portfolio companies, giving them opportunity to look at best practices, and giving them access to operating talent that they might not have in their peer set. These are small businesses where management teams are sometimes pretty skinny, and they need stuff to bounce off of people. So really excited about VCM, and we'll talk a little bit more about that later. We also continue to invest, if you were this morning, in technology and portfolio management. As you saw, we've got some pretty neat things that can help us manage larger portfolios, understand where the data is, really have access on the road. I can look it up at any point in time, ask questions to our portfolio team. So continuing to invest in the future. As we move forward, number 2, stick to what we know. Everybody wants to know about deployment. We saw 1,200 deals in the last 12 months and about 2,300 deals in the last 2 years in what we call our market. From that led to, in the last 24 months, Plexus Capital's put $288 million out into the market over 28 companies. So I can even do that math. That's about $10 million a company. So sticking to what we know means we're going to create a diversified portfolio for you, our investors, staying in the lower middle market. Over the last 12 months, $123 million over 18 companies. The thing that jumps out here is that's about $6.8 million a company. Market's pretty hot. People are coming down. We're going a little lower in order to keep what we think is a Plexus Capital type of transaction, both on return and structure. 30 million, this is a cool number. It's something that we kind of realized here recently in probably the last 18 months. This is $30 million that we've reinvested into 12 portfolio companies. So as we've gotten larger and we have more portfolio companies, we've had a lot more opportunity to put more capital behind teams that we know, whether they're growing, need CapEx, those types of things. So we consider this to be a really nice piece that we weren't expecting and expect it to grow over time. Sticking to what we know, EBITDA. So the past year we invested in 7 platform companies. That's the average EBITDA of the businesses that we invested in, $4.4 million of EBITDA. The point here is we're sticking to what we know. If you saw the chart this morning with Katie's circles, we are playing in the under $10 million EBITDA market. We're just creating more velocity with a larger team to get capital into this space. Structure. I talked about this a little earlier. It's hard right now, believe me. You guys who are out here and do lending and you're calling on middle market companies, it's hot. This is the structure, average structure of the companies that we did in 2017 to LTM from last annual meeting. So what you're looking at is we're trying to create a credit structure, so half a turn of senior, full leverage is under 4 turns, but generate a double-digit return on the cash coupon or the coupon for that deal. So that's really when we think about our discipline and our consistency around structuring and pricing, these are the things that matter to us, so we're sticking to what we know. Deliver exceptional returns. Everybody always likes this one. I know, I do. Exits. 16, we exited 2 businesses, and 17, we exited 4 businesses. Year-to-date 18, we've already exited 4, and I'll call it 4.5 or maybe 5 because Bob and I were looking at a fund flow this morning that we're exiting right now. Will just gave me the yes, it's a 5. So we had a really nice exit this morning, which is great. But as you can see, we don't know when these things are going to exit. We don't control the exits in almost all of our businesses. But from experience, we know that from year 4 to 6 is really when we start to see funds really start exiting. And so Fund 3 is really an exit profile right now, as year-to-date 18 can show you. We've already exited 5 businesses. And on the exit front, we currently have, I guess it'd be 4 or less 1 because we closed 1 this morning, but 4 companies right now in the market considering sale or recap or in some event for them to take us out. Distributions, the money slide, right? 16, we did 8 million. 17, we did 13 million. Year to date, 18, we've done 13 million. The last two slides are highly correlated, exits and distributions. As Will spoke to you this morning, Fund 3 is running a kind of $11 million annual run rate on just ordinary income, and then the exits will come in and create lumps of equity returns that will be distributed for the fund. So overall, it was a really good year at Plexus the last 12 months. Our portfolio really enhanced in value. We started making distributions in Fund 3. We added a couple of kids. We added a podcast. We added an operating partner platform. So I'm really excited about what we've got going for the future. And now I'm going to let Alex take over and take you through.